What's going on, guys? What's going on? Joseph here. Today we're gonna go through our passive income guide. Okay, we're gonna go through our passive income guide. It's 24 pages, and this is by Market Insiders. Here's all their information, and basically we're gonna check this out. We're gonna see what info he has to offer us and advice. Okay, we'll go through it together and just check it out, man. I'm here with you guys. You're here with me. We're here for all the same reasons, right? To learn, to grow, to understand money, break down money, use it in the right ways. So let's do that. All right. So like I said, Market Insiders. If you don't know who runs this, let me show you. His name. This is his channel. I love his channel. Posts very consistently and very smart guy. So I would definitely recommend checking out his YouTube channel. Okay, let's get into a passive income guide. Okay, so red light, green light, yellow light. Ready to make your first investment? You're in the right place. In this short ebook, we're going to break down how you can build wealth from your investments. We'll do that by covering 4 topics. Number 1, how to invest 101. How you can get paid, where do you invest, and how can you make your first investment even if you don't have any money, which I don't know about you guys, but it sounds about me right now. But before we begin, a quick disclaimer, which we know he can't give us any okay, let's just read it. We're not providing any financial advice. We're not providing any we're only providing education. If you have specific questions about your financial situation, please talk to a licensed professional advisor in your area. Now, investing 101. We are trained to become consumers. Most people earn money to spend it, but wealthy people and people who aspire to become wealthy use money very, very differently. Okay, they earn money to grow it. When you earn $100, you can do one of 3 things with that money. Number 1, you can save it. Number 2, you can spend it. Number 3, you can invest it. Okay. Which one are you doing? It's important to save. It's important to have a savings cushion so you don't have to worry about going into debt when an emergency happens. But most people statistically spend all their money and have nothing left to invest, which, is very true. Wealthy people and people who aspire to become wealthy do the opposite. They pay themselves first, meaning they invest and save their money before they spend it. This is where most people say something like, but I can barely afford my payments as it is. How am I supposed to invest money? There's the problem. Well, there are 2 things you can do. You can spend less money or you can earn more money. Okay? Most people assume that when they earn more money, all their financial problems will be solved. However, the data shows otherwise. When most people get a raise, they dig themselves into a deeper financial hole because now you can qualify for more expensive cars, bigger credit card payments, and a larger home. There's a big reason why the majority, over 50% of millennials who make over 6 figures a year, are still living paycheck to paycheck. Okay? Not because of inflation. The simplest way to start would be to create a financial system. Jaspreet Singh, I'm not sure how to pronounce that, recommends starting off with something like this: 75-15-10 plan, which says for every dollar you earn, 75 cents is the maximum you can spend, 15 cents is the minimum you can invest, and 10 cents is the minimum you can save. Now, I just want everybody to take a look at this real quick. Let me move this out. I just want everybody to take a look at this. Let this be the first step of your investing progress journey. Okay, let this be the first, because I'm in the process of doing this myself, and if we can get this down packed, then this is only the beginning, guys. Okay, only the beginning. You would ideally create 3 bank accounts that replicate this. That way you can earn money. Money will be paid to bank number 1 that has your spending account. Then automatically 15% of your paycheck will be transferred to the bank account number 2, which has your investing money. And automatically 10% of your paycheck will be transferred to your bank account number 3 that saves your money, that has your savings in it. Many banks will do this type of automatic transfer free of charge. And now you don't have to worry about accidentally spending your investing money on a new TV. The system will give you money to invest. But why is this so important? When you invest your money, you're trying to grow your money. When you spend $100 on a new pair of shoes, your $100 are gone. You'll never see it again. Even if you try to sell your shoes, you're not going to see anything close to $100 you spent to buy the shoes. If you save the $100, your $100 will be dead. It doesn't grow, it just sits there. And if the interest rate in your savings account is paying you, and if the interest rate that your savings account is paying you is less than inflation, then your savings are losing value. That's why you want to save 3 to 12 months worth of expenses after you hit your savings goal. Invest that money instead, please. So, when you invest your money, you're buying something that will hopefully grow into value. Now you're trying to turn $100 into $200. You're putting your money to work because you can't always work. There's a limit on how much you can earn, but there's no limit on how much you can own, okay? This is why investing is so important. Investing means you are buying assets that pay you. The more assets you buy, the wealthier you will become. If you want to break out of the system of consistently working to get paid, you have to own more assets, because when you are investing your money, you're buying a day that you don't have to work to get paid, okay? What you'll see in this ebook is that you can start investing for wealth, no matter where you live, what you look like, how much money you make, or what kind of job you have. You can start investing with little as $1, but it will require you to develop your financial education so you know how to use your money as a tool, which is what we're doing here, okay? We're reading this book so that once we can invest that $1 and we know what to do with our money now, okay? Because we took the time out of our day to learn this, just like you're watching the video, just like I'm making this video, all right? Alexa, all right. There are 2 ways to get paid when you invest your money. Number 1, appreciation. Number 2, cash flow. Appreciation is when the value of your investments grow. For example, you invest $100. 2 years later, your investment's worth $200 and you sell, and you made $100 profit. That's appreciation. Cash flow is when you get paid for owning an investment. For example, you invest $100. The investment begins to pay you $5 a year just for owning the investment. Before we get into those details of where to invest your money, let's talk about the pros and cons of each. Let's start with appreciation. When you invest long-term appreciation, you're taking on more risk because you don't get paid until you sell. If you make a $100 investment and it goes up to $200, you haven't made any money yet. You only make money when you sell, which it's a good point to look at things. A lot of people want to buy a car for $2,000, want to sell it for $4,000, but you don't really make your money until you sell it for $4,000, and you don't know if you can sell it for $4,000. You just never know. So that's why it's a little more riskier. Okay. Likewise, if you invest $100 and your investment goes down to $50, you don't lose money until you sell. Okay, so vice versa. Assuming your investment doesn't go bankrupt. Well, that's true too. As an investor, you're investing for long term, years or decades. So you're hoping and calculating that your investment will be worth more money when it comes time for you to sell. Excuse me. With cash flow, you get paid while you wait. If you make a $100 investment that pays you $5 a year, now you're getting paid while you wait and hope for your investment to go up in value. But there's also some cons here. The first being taxes. If you get paid with cash flow, you have to pay taxes on that income, which I didn't know, and now we know. So that is a con. The second being growth potential. If a company you invested in is paying you with cash flow, that means they're taking more money out of their bank account. Instead of using that money to grow the company, they're giving it to you. Okay? That means generally the cash flow producing assets will appreciate in value less quickly than a company that is aggressively investing in their company. Okay? Are you guys with me? In the next lesson, we will discuss the different investments you can make for appreciation and cash flow. Number 3, where to invest. You're in the same boat as me, don't know where to invest? Let's figure out, okay? The purpose of financial education when it comes to investing is so you can grow your money faster. The faster you can grow your money, the wealthier you can become, okay? Now look at that. They got that right here nice and big for us, man. The faster you can grow your money, the wealthier you will become. I think that's why we're here today. Here's a catch. If you don't want to grow your money faster, you generally have to just take on more risk. That means a higher likelihood of you losing your money. Okay, which that's why they call it the risk. Hello guys, we're here. So here's a list of different places where you can put your money in order from lowest risk to highest risk. Savings account, number 1. Number 2, certificate of deposit. Number 3, traditional investments like stocks and real estate. Number 4, a business idea. Okay. Number 5, lottery tickets. When you deposit $100 in your bank, you know with high certainty that if you went to the bank tomorrow, you would have $100. It would take something catastrophic for your bank to be wiped out. Okay. Even then, in America, you are protected with FDIC insurance on your savings, which I hope if you're watching this, you know what that means. So you have very little risk when you put your money in the savings account. However, your money will see the slowest growth ever. Okay. If you invest $100 in your bank and you get 0.5% interest rate, that means after 1 year you earn 50 cents. Okay. Even if you have more money, like $1 million with a 0.5% interest rate, that means your money grew by 5,000 after 1 year. Low risk, but low return also. On the other end, with lottery tickets, a $2 lottery ticket can make you a multi-millionaire. However, you more likely to be struck by lightning than you are to win the lottery. Okay, and that's crazy. I never even knew that. You're more likely to be struck by lightning than you are hitting the lottery. High potential return, high risk. Investing in a business idea, whether it's your own business or someone else's business, can bring you huge returns. Okay, if you don't have no business ideas and your friend has that one brilliant business idea, don't be afraid to invest in that. Don't be afraid to tag along and support your friend, okay? Because you don't know where that can go. And also because that's your friend and you should just be supportive from the beginning, okay? Imagine if you were one of the early investors in Apple or Amazon. Just imagine, guys, and you see where that's at today. But it's also very high risk. Most startups fail within the first 5 years of starting. This doesn't make it a bad investment. If you're an entrepreneur, investing in your idea can be the best investment of your life. That's why I'm never afraid to invest in myself. I will invest in myself before I invest in anybody in the world because I know myself, okay? But the purpose for this ebook will be focused on traditional investments like stocks and real estate. These investments have been around for a long time and have proven the test of time. Historically, over the last century, we've seen real estate prices and stock prices rise. Does that mean the asset prices only go up? No. We've seen many periods where asset prices fall. In fact, about every decade or so, we've experienced a recession or economic slowdown that has caused some type of sort of asset crash. Here are a few examples. 2020, your stock market crashed. 2008, the real estate crashed. 2008, stock market crashed. 2000, stock market crashed. Okay. But even with these crashes and recessions over a long run, we've seen asset prices continue to rise. That's why long-term investing is so important. The mistake many people make when they see asset prices fall, they sell their investments at a loss instead of buying more at a discounted price. If you guys are looking at the recession as not an opportunity, then you're on the wrong channel here, okay? We look at things like that as opportunities, all right? And just the mindset of an entrepreneur, everything is an opportunity, okay? Even if it's something that's catastrophic like that, the stock market crashing, it's still an opportunity because, like we said here, the mistake many people made is they sell at a loss instead of buying at a discounted price, okay? More millions are created during market crashes than any other time, which I knew that also. This is because market crashes create a great buying opportunity. Both stocks and real estate give you the opportunity to earn cash flow and dividends. I didn't know that dividends you get from real estate. In the stock market, you can get appreciation when you buy a stock that goes up in value, and you get cash flow with the company when a company pays a dividend. Dividends are cash payment you get for owning the stock. Note, not every company pays a dividend, okay? Also, a company will pay a dividend only if they're making large profits and can afford to take the cash out of the bank account and give to their shareholders, which will be us because we bought the stock, okay? If a company is not profitable, they will generally not be able to issue a dividend. In real estate, most investors buy real estate with cash flow as their primary goal, which could be my primary goal when I get into real estate in the future. You buy a property, whether it's a house, an apartment complex, an office building, or an industrial building, or a retail plaza, with the goal of renting it out. Now, your rent should cover your expenses and put some money in your pocket, right? That's the goal. Plus, if you're investing in a growing area, you should also see the value of a real estate rising over time. So it's a double gainer, man. There's a win-win situation if you play your cards right. Again, this does not mean that your investment value will rise every year. This means over the long term, asset prices generally go up, assuming you're investing in a strong asset. Remember, you can't just invest in anything and automatically assume it's going to go up. All right. This means assuming in a strong asset with growing demand. The way you differentiate. I don't know why I can't say that, but a good investment from a bad investment. Can you tell the way you compare and contrast, or can you tell the difference from a good investment from a bad investment goes beyond the scope of this ebook? We cover that in a different video. But that's where the quality of your financial education comes into play. Lesson number 4. Make your first investment, even if you don't have lots of money. Now, I can tell you right now, this is the only dollar I got. This dollar right here. That's all I got right now. So, let's see what we can do with it. Not everyone wants to be a full-time investor, and that's fine. You don't have to be a full-time investor to build wealth through the investments, okay? You just have to know how involved you want to be as an investor. There are 2 general strategies for investing your money. You can be a passive investor or an active investor. Both of these require you to invest for long term, but they have different time requirements. As a passive investor, you will set your investments and forget about them. There's little upkeep once you get it set up. As an active investor, you're going to be more involved. You want to be working and monitoring your investments, okay? And managing your investments. There's more time and knowledge required. As an active investor, you have the potential to get higher returns because you're also taking on some more risk and putting in more work, okay? But it will take more time and effort on your end, which most people don't want to do. But, okay, then you don't have to be an active investor. Less risk. With that being said, you can become wealthy as a passive investor too. If you invest $100 a month starting at the age of 21 until you retire at 66, you got a historical market return which has been 10%. You would retire a millionaire. Let me read that again. For the people who say they don't know where to start. For the people who say, listen, if you invest $100 a month at the age of 21 and until you retire at the age of 66 and you leave it there and don't touch it and continue to do $100 a month, invest, you will have almost a 10% return, which means you will retire a millionaire, okay? And this assumes you don't invest more than $100 a month, even as you earn more money, right? You can't go back in time, but you can change what you can do with the money today. Let's start by talking about how you can make your first passive investment. As a passive investor, the goal is to set it and forget about it. You don't need to keep up with the daily swings in the market. Remember, you're investing long term. Also, you don't have to invest in individual companies. Instead, you can invest in funds as a stock market investor. There are 3 general kinds of funds. Index funds, mutual funds, and ETFs. Each one of these give you the exposure of a basket of stocks now. Instead of investing in just one company, you can get exposure to hundreds of companies through one fund. Here are a few ETFs to jumpstart your research again. Now, these aren't recommendations. I'm just mentioning them here just for educational purposes. VTI. This is an ETF that gives you exposure of the total stock market. It was created by Vanguard. SPY. This is the ETF that gives you exposure to the S&P 500. It was created by SPDR. DIA. This is the ETF that gives you exposure to the Dow Jones Industrial Average. It was created by Spider. And the QQQ. You probably heard of that one before also. This is an ETF that gives you the exposure to NASDAQ. It was created by Invesco. So I personally invest in SPY. Okay, QQQ is another good one. They're all good, but I invest in SPY. When you invest in one of the ETFs, you buy the entire basket or index of stocks. This allows you to be passive because you don't have to worry about picking the best company to buy, right? How do you win as a passive investor? By creating an automated system. Every week, 2 weeks, or a month, you want to automatically purchase more of these investments you have. This way, every time you get paid, you're buying more assets. The great news is many apps on the internet have automated this. And some great apps will allow you to start investing with just as little as $1. So if you can't say and tell me you don't have $1 to invest, start today, man. Jesus. As a real estate investor, you can also follow a similar passive investing approach. However, you'd be investing in a real estate fund. These funds are not found on the stock market. They're commonly known as a crowd-funded real estate investment details on the internet. Off the internet, they're commonly known as the syndicate deals. Now, you're investing into a fund that either gives you ownership into someone else's real estate project or gives you exposure to someone else's real estate deal. In either case, you don't have to worry about managing the property or dealing with tenants, which is great to me. You invest money and you make money when the property or properties you invested in make money. This brings us to being an active investor in the stock market, which means you will be investing in the individual companies. To do so, you want to research the stock you want to invest in. That means study the finances, balance sheet, cash flow sheet, income statement, which I do also on a YouTube channel called Everything Money. They break down individual stocks and their finances, balance sheet, cash flow sheet, income statement, all that, to let you know if this will be a good investment, and if it's not, when will it be a good investment. Okay, Everything Money, great channel. So researching the products, learning about who's leading the company, etc. You're investing in a business. You want to know everything you can about the business before you buy. Remember, when you buy a stock, you're buying a piece of that business. Okay. Now, if that business is not making money after that, you're not making money after that either. Okay. So when you buy one share of Amazon, you become one owner of Amazon's company, right? So you want to do your research to confirm it's a good investment at a good price before you buy. That's what I said. Make sure it's a good price also. Again, there are many apps on the internet that let you start investing with companies as little as $1. $1. Jesus. This doesn't mean you have to manage it yourself either. You can hire a property manager. No, I'm sorry. As a real estate investor, this means you're going to buy properties to operate yourself. This doesn't mean you have to manage it yourself. You can hire a property manager to relieve yourself from day-to-day duties of owning a property, which is not bad, okay? Maybe that's something I'd be interested in the future when I get into real estate. But you, as the owner of the property, are responsible for the property, obviously. This will take more time and effort on your side. Yes, it's more work, but also comes with benefits as well. The benefits include tax breaks, cash flow, and appreciation. These are just some of the topics we cover in great detail in the Market Insiders app, which is a great app by Josh Spreet. Great. What just happened? Invest. Let's invest, guys. So, you ready to take your financial education to the next level? All right. And that was it, guys. Wow, that's it. Oh, wow. So, as you can see, man. Oh, one more. These are just some topics we cover. Invest. You're ready to take your financial education to the next level? Our platform can help you with that. All right, guys. Well, I guess that was it. Guide to Cash Flow and Passive Income ebook. I can tell you right now, just little things like this, it helps you with your financial education. It helps you helps you learn, about your money, what to do with your money, like you said up top. And we can go back and if you have any questions, anything, leave it in the comments below, because I will gladly go through it, and I want to grow with you guys. I really do. I want to make this channel something where we can all learn about investing our money and growing in entrepreneurship and building a business and running a business and managing and all that. Okay, I need you guys to participate. Drop a like, comment, subscribe. I want to build a nice community where we can grow. Okay, I'm in the same shoes as you guys. I'm on YouTube all day wondering how can I grow my money, right? Not these TikTok videos. Make $10,000 in 1 month. Yeah, that's possible, okay? But it's not possible if you don't put the work in. And that's why we're here today, to put that work in, okay? So take a couple minutes of your time, start watching some videos. If it's mine, if it's not mine, just take some time out of your day and watch some videos and learn. Because if not, you're only getting dumber by the day. If you're not learning every day, you're getting dumber, okay? It doesn't hurt to take 10 seconds to read 1 page of a book every day. And that alone will just improve your vocabulary. Now at a slower rate, but now put some discipline in yourself and read the whole book, okay? Read half the book. Read 5 pages a day. Do something educational, discipline, motivational, something, all right? So I hope you guys learned something from this as well as I did. And stay tuned for the next video, man. We're going to be getting deep in this. I hope you guys enjoyed. Drop a comment, like, subscribe. Appreciate it. A new video coming soon.